When we talk about the most successful traders in the world, we're not just talking about people who made money, we're talking about legends who rewrote the rules of the financial game. Names like Warren Buffett, George Soros, Paul Tudor Jones, and Jesse Livermore echo through trading history because they combined courage, intelligence, and discipline in ways most traders can only dream of. What truly separates them from ordinary traders is not just timing the markets, but understanding risk, patience, and psychology. George Soros once said, "It's not whether you're right or wrong, but how much money you make when you're right, and how much you lose when you're wrong." This single line captures the mindset that defines billion-dollar traders. They don't chase perfection, they manage risk with precision. Imagine sitting at your trading desk with the calmness of Buffett, the aggressiveness of Soros, and the discipline of Jones. How powerful would your results be? Dear friend, if you want to dive into this mindset and learn how these principles can transform your trading journey, subscribe to the Trader's Mindset right now. This is where we translate billionaire wisdom into practical steps for your own success. Behind every legendary trader lies a core philosophy that guided their decisions through uncertainty. Warren Buffett, the Oracle of Omaha, built his empire not by chasing hype, but by trusting in intrinsic value. He looked at businesses like living organisms, not just numbers on a chart, proving that patience and fundamentals create wealth that lasts. On the other hand, Jesse Livermore, the infamous boy plunger, built his fortune by reading pure price action, proving that charts alone could reveal opportunities others missed. These traders show us there is no single holy grail. Success is born when a trader finds a strategy aligned with their personality. Alexander Elder put it brilliantly. The market is a device for transferring money from the impatient to the patient, and history proves him right. Consider this: two traders see a stock jump 10% overnight. One panics, fearing collapse, and sells too early. The other calmly studies volume, trend, and news before making a move. Over years, this discipline transforms into consistent profits. The lesson is clear: patience is power, and discipline is the foundation upon which trading empires are built. If there is one common thread running through the lives of the world's most successful traders, it is their relentless focus on risk management. George Soros, who famously broke the Bank of England in 1992, didn't win because he blindly bet billions. He won because he understood probabilities, position sizing, and the exact point where he would cut losses. Soros himself admitted, "I'm only rich because I know when I'm wrong." This humility to accept mistakes quickly, without ego, is what saved him billions over decades. Compare that to the average retail trader who holds losing trades too long, hoping the market will turn in their favor. One strategy for success is the 2% rule. Never risk more than 2% of your capital on a single trade. Pro traders protect their accounts like warriors guarding a fortress. Think of it like driving a car. It's not about how fast you go, but how safely you control speed around turns. Without brakes, even the best engine crashes. In trading, risk management is your brake system. Dear friend, if you want to adopt the mindset that puts safety before greed, then you are already stepping into the world where legends are made. While charts, indicators, and strategies are important, the real war in trading happens inside the mind. Paul Tudor Jones once said, "Don't focus on making money, focus on protecting what you have." That single shift in psychology allowed him to survive multiple market crashes and still grow his fortune. The truth is, fear, greed, and FOMO destroy more traders than bad analysis ever could. Take a daily life example: two people attend a party. One overeats impulsively because food looks tempting, while the other eats just enough. Thinking about health and discipline, the first feels regret, the second feels strength. Trading psychology is no different. Emotional control is what separates professionals from gamblers. When Buffett calmly buys during market panic, he's not braver than others, he's simply trained his emotions not to react. As a trader, your greatest asset is not your strategy, it's your ability to stay calm under pressure. Discipline turns chaos into opportunity. Dear friend, if you're serious about building the trader's mindset that can handle both fear and euphoria, then this is your chance to level up. Join the trader's mindset today and learn how to think like the greats. The most successful traders in the world share one incredible trait: adaptability. Markets are like living organisms. They evolve, shift, and surprise even the sharpest minds. Jesse Livermore, often called the Great Bear of Wall Street, made and lost fortunes multiple times because markets kept changing. His story teaches us a powerful lesson: sticking rigidly to one strategy without adapting is a recipe for disaster. Compare it with everyday life. Imagine someone who only knows how to drive in daylight. The moment it rains or gets dark, they panic, while an adaptable driver adjusts speed, uses headlights, and navigates safely. Traders must learn the same skill. During bull markets, professionals ride trends with patience, but when volatility spikes, they switch gears into defensive trading. Technology also plays a big role. Modern legends like Ray Dalio use data-driven models to constantly refine their strategies. Adaptability doesn't mean abandoning your core principles. It means updating your approach while protecting your foundation. The truth is, markets will never reward stubbornness, but they will always reward flexibility combined with discipline. If you want to walk in the footsteps of great traders, learn to adapt as quickly as the markets themselves. In a world that glorifies fast profits, patience often feels underrated, yet it is the silent force behind the success of top traders. Warren Buffett, one of the richest investors alive, has said, "The stock market is a device for transferring money from the impatient to the patient." This single principle explains why he has held positions for decades, compounding his wealth beyond imagination. Patience in trading is not about doing nothing. It's about waiting for the right opportunity while everyone else is rushing. Imagine a fisherman sitting by the river. The impatient fisherman throws bait again and again, disturbing the water, while the patient one waits calmly, knowing the right catch will come. Trading is strikingly similar. Many beginners jump in and out of trades, chasing every move, and eventually burn out. Successful traders, however, master the art of waiting. They let setups align, probabilities favor them, and only then do they strike. In forex or stock markets, this patience often means holding cash instead of forcing trades. The ability to sit on your hands is what turns average strategies into profitable ones. Patience may not be flashy, but it is the quiet engine behind long-term success. If there is one universal rule that every successful trader lives by, it is risk management. Paul Tudor Jones, one of the most respected hedge fund managers, famously said, "Don't focus on making money, focus on protecting what you have." This mindset separates professionals from amateurs. Most beginners dream of doubling their accounts overnight, but the world's top traders think differently. They prioritize survival. Imagine a soldier entering battle without a shield. No matter how sharp his sword, he won't last long. Similarly, in trading, even the best strategies collapse without proper risk control. Great traders never risk more than a small percentage of their capital on a single trade. They use stop losses religiously, diversify positions, and understand that capital preservation is the foundation of compounding wealth. For instance, George Soros, who made billions betting against the British pound, never risked his entire fortune on one trade. He calculated risk and protected his downside. The irony is that by focusing on safety, traders actually give themselves more room to win big over time. Risk management is not about limiting success, it's about ensuring you stay in the game long enough to achieve it. The journey of a trader never ends because the market never stops teaching. The most successful traders in history share a common trait: they remain students forever. Bruce Kovner, a billionaire trader, once admitted that he still reads, studies, and adapts every single day, despite decades of success. This humility to learn is what keeps winners ahead of the curve. Imagine technology, phones and computers constantly update, and those who refuse to upgrade fall behind. Trading works the same way. Market conditions change, new financial instruments emerge, and technology like AI reshapes analysis. A trader stuck in old habits becomes irrelevant. That's why pros constantly review their trades, study global events, and learn from both wins and losses. Continuous learning also protects traders from arrogance, the silent killer of accounts. The moment you think you know it all, the market will humble you. Many legendary traders keep journals, attend seminars, and even mentor others to sharpen their own skills. In truth, markets reward curiosity, discipline, and growth. The edge you build by learning today becomes the foundation of tomorrow's success. If you study the world's most successful traders, be it Jesse Livermore, Ray Dalio, or Warren Buffett, one common thread emerges: unshakable patience and discipline. The market is designed to test emotions, trick impatience, and reward consistency. Livermore once said, "The big money is not in the buying or the selling, but in the waiting." Think about it. Most traders fail not because they lack knowledge, but because they cannot sit still. They overtrade, chase signals, and let emotions dictate actions. But patience allows traders to wait for high-probability setups instead of forcing trades. Discipline ensures they stick to their plan, even when the market tempts them to deviate. Imagine a fisherman who throws his net every second. He catches nothing but wastes energy. A disciplined fisherman, however, waits for the right tide and returns with a boat full of fish. Trading works exactly the same way. The world's top traders understand that the market will always present opportunities. The real question is whether you have the discipline to wait and the patience to act only when the odds are in your favor. Patience doesn't just save money, it builds wealth over the long run. The greatest traders of all time didn't just make money, they built mindsets and legacies. George Soros challenged central banks, Paul Tudor Jones predicted crashes, Ray Dalio created principles that shaped entire hedge funds, and Warren Buffett proved that patience outperforms speed. Their success wasn't luck, it was a result of psychology, discipline, and strategy repeated daily for decades. But here's the truth: most beginners miss these traders weren't born extraordinary. They became extraordinary by building the right mindset. And this is exactly where your journey begins. You don't need billions to think like a pro, you need clarity, patience, and the courage to learn. Dear friend, if you truly want to step into the world of consistent profits, resilience, and professional growth, then you must start building the trader's mindset today. Because strategies may change, indicators may evolve, and markets may shift, but the mindset you develop will guide you through every storm and towards every opportunity. Don't just admire the legends, become one by embracing the same discipline they lived by. Dear friend, if you're serious about trading success, now is the time to commit. Explore the trader's mindset and start building the discipline, patience, and confidence that can transform your future in the markets. The legends didn't wait. Why should you?